Okay, I'll keep going. So what kind of costs are we going to be talking about? Why do we need to understand the different types of costs? So there's two main costs, fixed and variable cost. This is really important. So let me tell you a story. So when I was 18, I owned a recording studio, and I didn't understand the difference between fixed and variable costs. But when I made my recording studio, I had to buy equipment, right? So I had to get a lease, and I had to buy like mixing boards and guitars and drum sets and microphones. All of these things are fixed costs. They don't change as I start to record bands. My goal was to record bands and charge them for recording them. So all that equipment, you eventually have to make that money back, by the way, right? That's like the goal of the business, is to make the money back. But then I also had variable costs that change in proportion to the activity. So if a band was to come in and let's say I had to hire an engineer to record them, or to hire an assistant to help me out, for every hour that they were there, that would be a variable cost. All businesses are measured this way. You have your fixed costs and your variable costs, and you have different business structures. One of my biggest pieces of advice to entrepreneurs is your first business shouldn't have a lot of total fixed costs. It should be mainly based off variable costs. So like tutoring is one of my high recommendations, or like basic education services are great for a first business for an entrepreneur because they have variable costs, but not very relatively low fixed costs. The other concepts we're going to be talking about are direct and indirect costs. So I have my recording studio business. If I hire an engineer to help me record a band, that's easy for me to trace that cost to the band I recorded, right, to the money I was making. But what about my lease? Let's say in a month I record 10 different bands. How do I allocate my lease expense to those different bands? Or what if I had to pay for electricity for that lease? Or maintenance for the equipment? It becomes much more abstract, right? We have a lot of trouble. I'll have a lot of trouble trying to directly tie those costs back, and I'll need to make estimates. Right? I can make estimates based off days. I can make estimates based off hours, or the amount of electricity used, or the type of equipment they're using. And so you need to know that some costs are easy to trace. So we call direct costs traceable, and indirect costs we can't trace. We have to make estimates for. Examples of direct costs are materials and labor costs. Indirect costs might be your lease or maintenance expense for two different departments. Fixed costs are costs that don't change with the level of activity. Variable costs change in proportion to the level of activity. So make sure that's a fundamental knowledge for this course. Make sure you know that. We're going to go into a lot of detail regarding that. So other concepts we have are these concepts of product cost and period costs. Product costs and period costs. So products are made up of these three concepts. All of this you're going to need to memorize. Direct labor, direct material, and manufacturing overhead. We also call this factory overhead. What are these? Direct labor means any labor going into building a product. Materials are the materials, right? Kind of makes sense. And the overhead is everything that we can't directly trace to the product. So that might be your electricity. These are your indirect costs from back here, right? Your indirect costs are generally going to be your factory overhead that we need to somehow apply to the product. Because let's say I charge for my recording studio services, I charge the exact amount of my labor. So I'm like, oh, my labor is $20 an hour. So I'm going to charge them, my customers, $20 an hour. Well, I'm not taking into account my lease expense or the cost of all of my equipment, my depreciation. And so I'm going to actually lose money. My business won't be successful. And then if you don't plan that when you're building your business at the beginning, you're just setting yourself up for failure. So you have to allocate all of these indirect expenses to whatever product or service that you're selling. There's also period costs, which are expensed but not attached to products. So what if you have a selling person? So like a selling and marketing cost. So a sales team might not be related to any of your product, right? Or what about your accountant? Like, how do you associate your accountant with a product? These are period costs. Your G&A expenses are also what they're known in traditional terms. Your general and administrative expenses, where they're still relevant to your business, but you really can't trace them to a product. They didn't go into making your product at all. And so here's how they kind of flow through the financial statements, right? So product costs on a GAAP perspective go into inventory, which gets stuck on your balance sheet. So you remember your FIFO, LIFO, all that fun stuff. We talked about that you get your product costs given to you. Now we're going one layer deeper. How do you determine those product costs? And then that gets stuck on your balance sheet. Anything that you expensed goes on your income statement, right? Anything you sold. And then your period statements, your period costs, like your selling and marketing and whatnot, go as operating expenses or your general and administrative expenses on your income statement. So something here is to memorize, just so you kind of get the gist of it. Like if we are selling bicycles, the tires and wheels are variable, right? Because as you sell more bicycles, you have to buy more tires and wheels. That's a direct cost, and it's a product cost. Well, advertising, I might be paying salaries for my advertising expense, or I might be paying a certain amount every month. That's going to be fixed, but it's not directly attributable to the product, so it's a period cost. These are the kind of questions I might ask you. We can go down this list, and if you have questions, let me know.
So I had a question.
Yeah.
Wouldn't it be variable because the more you want to advertise, the more you need to pay as your business expands?
So that's a good question. So it depends, but generally we're going to choose advertising as either a fixed expense, right? That's how we would generally assume, because you're not going to, it's not tied to your production.
All right. Okay.
Right?
Yeah.
But you could also, you could tie it to your production, and that's where this judgment comes in, right? Where as a business decision owner, you could say, I will look back every previous month and increase my advertising expense for every unit sold. And then, yeah, it would be variable in that way. But from this perspective, we're looking at it as fixed. So there's some judgment in these, and I'll be lenient. I'll try to avoid these on the midterm where there's any judgment related to it. But just know in practice, there's judgment, but most people just have a fixed budget and they'll say, I'm going to spend $10,000 a month on advertising.
All right. Thank you.
That doesn't mean that's correct though, right? Like I think there's other ways you can approach it as well. So that's a good question. Any other questions?
Professor?
Yes.
Yes. So anything tied to your production will be a variable?
Anything that increases with your production. So like the bicycle tires and wheels. So if I'm selling bicycles.
Okay.
Does that make sense? Like if I'm selling bicycles, every time I sell a new bicycle, I'm going to have 2 new tires attached to it.
Yeah.
And so it increases in a linear fashion with the increase of production. Does that make sense?
Yeah, makes sense.
While our office, my lease doesn't change. I could sell 1 bicycle or 1,000 bicycles. I still have to pay my lease, right?
Yeah.
Yeah. Okay, great questions. Keep them coming. Any more questions? Remember, you're graded on participation, so I'm noting this. Okay. I'll keep going. So let's talk about service companies. I think these are very valuable. Like if you become an accountant, you would be a service company. So I work for service companies, audit company, a tax company, a consulting company. All of those are service-based companies. And so the cost concepts described are generally applicable. So what we're talking about here, you can apply to service organizations as well. And you can build out your product cost as your employee costs. So they're saying here, like Southwest Airlines is a service-based, right? Like they're flying people to destinations. They're a transportation company. And so they may have a certain beverage expense or gas expense by employee. So just know that I'll continue reminding you, the goal of this is to get abstract. Like how can I tie these abstract costs to what's generating me revenue, right? And I really want to challenge you here. Do that in your everyday life. Like when you make a decision, you should be asking yourself if it's sending you to your goals. Are you moving in the direction that you want to head? And if you haven't thought about where you want to head, you need to do that. Because then you're just letting other people decide your life for you, right? So to make a goal for yourself, like a business needs to make a goal. Where do they want to get? And then make sure what you're spending your money on furthers your goal, or spending your time. That's what we're talking about here in managerial accounting. So this is a typical manufacturing cost. So we're saying you don't need to memorize these statistics. It's not that valuable. It depends with each business. We're saying most of the costs come from our materials and overhead when we're making products. And then the labor is the least amount, especially as we're getting more into machining and automation. Labor is becoming less of a part of production. So what are direct materials, direct labor, and factory overhead? Direct materials are what they are. They're any expenditure made on materials that are going to create the finished good, go towards making the finished good. So if I'm making a bike, right, I need my wheels, I need my steel, I need all that fun stuff. And then I need labor to build the bike, right? That's what direct labor is. Any cost that goes directly into building the bike. So if I'm building the bike, that's direct labor. If there's an accountant then checking how many bikes were built, that's not direct labor. That's a period cost. And then factory overhead, which is what we talked about, our lease expense, our maintenance, our cleaning supplies. If we have a manager overseeing a bunch of people making bikes, like a supervision costs. So memorize all of these and then know that we break them down into different concepts. So direct material and direct labor combined are known as prime costs. So if I am to ask you, what is the prime cost for the bike? You would look at all the direct material and add all the direct labor. And I have example questions on my YouTube channel on this. And then if you want to know the conversion cost, it's the direct labor plus the manufacturing overhead. Now, why does this make sense? The prime costs are how much it would cost us to build something without manufacturing overhead. So if it was just, what are the raw goods we're using to build this? Well, the conversion costs are how do you convert the direct materials into a finished good? So prime costs are like, what do you need in order to make the finished good? And the conversion costs are how do you convert it over convert the direct materials to a finished good. We only sell finished goods. So then there's this concept of non-manufacturing costs, these period costs, we've talked about it, selling and administrative expenses. They're not factory overhead. Any question here? You need to memorize this, right? Like this is fundamental. You need to know your direct materials, direct labor, and factory overhead. You need to know what constitute a prime cost or what constitute a conversion cost. And then you need to understand how they relate to indirect costs and direct costs, period costs. All of these terms are like fundamental knowledge for the rest of the class. So your homework will reflect that.